how many dollars went in, and what percentage of your overall investment went into each of those metals.
Okay, so let me ask you this. So if you're a money manager or you have a portfolio you're managing, and your goal is to put a certain percentage of your portfolio into precious metals, and this allows you to do that in a cost-efficient way.
Correct.
on a dollar per metal basis. So you're not, so just forget about the weight here. You're just saying, I want to put 10% of my portfolio into precious metals. I go into the PMC ounce. It's a virtual ounce, if you will. It's not an actual physical product. However, it's backed by actual bullion in the vault, I guess.
Correct.
Is that bullion allocated in the name of the customer?
It's all allocated to the PMC ounce, and the depository records all the owners of those PMC ounces. We actually have a dual reporting system. Transaction confirmations come from us, but the depository also confirms the arrival of the metal and the allocation in the client's name.
Okay, who is Neptune Global? Okay, you're with Neptune Global. Who is Neptune Global? I've never heard of Neptune Global. Well, who are they?
Okay, so we've actually been around since 2002. We're a full-service precious metals dealer, but the product, the creation of the PMC ounce has really differentiated us. And over the last 2 years, it's driven our business 4x. And 2 years ago, the PMC ounce was about 25% of our business. Last year, we were about 70. So as investors become aware of it and they see the logic of it, we show right on our homepage the performance of the PMC ounce versus gold and silver going back to 2008. And you can see that the PMC ounce has a much smoother blended return versus something like silver, where a lot of people, piled into silver in 2011 and 12.
Really? Is that fact?
One or two, folks. Yeah.
Wow.
And
oh, yeah, I do remember that.
Yes.
I do remember that. Yes, that's right. That's correct. So, go ahead. Sorry.
So, yeah, and this is why, that little exposure to platinum palladium helps. A great example is in 2013, 14, and 15, as silver and gold pulled back, people weren't aware that palladium was doing well. Palladium's doing excellent right now.
Yeah, why? Why?
There's a host of reasons for that. I mean, a lot of it is considered supply shortages. There's getting to be a little bit of a squeeze. And you're really seeing palladium close the gap with platinum. I mean, it's performing
Well, platinum is used in catalytic converters, right?
Correct.
And then what's it used for?
Same thing. Platinum and palladium are both used in catalytic converters. Platinum is used exclusively for diesel. In gasoline engines, you use platinum or palladium. And basically, they can use either one as a substitute. They kind of look at what the pricing is. And as technology gets better and maybe they get a little more efficiency out of palladium, you'll see more palladium used.
So in other words, I send you guys a check from my bank, and you buy this PMC ounce, and it's liquid, so I can give you an order to sell. You go back into cash, and you would send it back to my bank.
Absolutely.
That's the relationship.
T+2. It's fully liquid, and it trades in real time, and there's no delay.
T+2, so a settlement date, you're saying?
Correct.
It's a 2-day settlement date.
Exactly.
Like any other security.
Correct. And that's just moving the metal then out of your name into, our account, so we can either, sell it back into the marketplace or just, hold it for until we have to add it to someone else's account.
All right. So now you guys in the precious metal industry have a lot of competition now with cryptocurrencies, like Bitcoin.
Yep.
I mean, even a couple of years ago, if I said that they were competing with each other, the precious metals folks would be like, that's crazy. It's never going to happen. But now you've got over $100 billion in crypto, and you have a new generation brought up on crypto. This millennial generation doesn't know gold from, kryptonite. They don't know it. They know Bitcoin.
You're right.
So is it a genuine competition? How do you see these two working out?
Actually, I know there's a lot of contention with some of the folks in the precious metal space versus the cryptos. And I don't think that's really accurate. I think right now, there's obviously much more focus on what's happening with the cryptos because of Bitcoin. And, the precious metals are always being interfered with, and the feeling is their price is suppressed. But at the end of the day, even though cryptos may be suppressing the precious metals a little bit now, I think it's actually going to be good for them in the long run. Because the cryptos are challenging what we call the status quo. And the status quo is really the enemy of the precious metals, right? So as the status quo continues to get challenged, that will be good for precious metals. And then it's on our part to help educate the younger generation that both should be in your portfolio. It's not one or the other. It really should be both. And I think the PMC ounce also appeals to, someone who are looking for something that's maybe a little more thoughtful, a turnkey, diversified portfolio. The metals don't move in lockstep. They are all precious metals, but they have different drivers, and they perform differently at different times. Again, I'll go back, palladium being a tremendous example. totally outperforming all three metals
Well,
over
now
the last several
gold,
years.
I believe, over the past 10, 15 years or so, it's been moving up on average something like 7% a year.
Mm-hmm.
Have you gone back and figured out what a PMC ounce would be over the past, backdated it over the past 10 years?
Well, we have it right on from 2008, and it's right on our homepage.
And what's it been doing?
It's as of last night, it was up 66%, which has
on an
outdone
annualized
both
basis, what
gold and silver. Well, 8 years. You do the math.
No, you do the math.
About 8% a year.
So it's outperforming
gold and silver
by a bit.
Yes.
Okay.
But the point is, it's not a managed fund. We're not here buying and selling, trying to market time.
Right.
The value is we're mitigating the high volatility. So if you look at that chart on our homepage, you say, okay, it's a little bit ahead of gold and silver. Now, silver was
with less risk.
With less risk.
It's risk adjusted. It's doing enough to warrant getting involved. Let's put it that way. So
exactly.
The performance could be outperforming, but on a risk adjusted basis, you have a smoother entry into this precious metal market. You don't have the volatility quite as pronounced, I guess you could say.
Exactly. And we all know that true portfolio management is managing the volatility. It's not just chasing returns. So,
right. I mean, that's what people completely miss, that people get rich not by making money, but by getting rid of risk.
Exactly.
That's how you make money.
Exactly.
It's not by making money. It's by not having any risk. And that's the key to it.
And that is
You used to work at Merrill Lynch, right around the corner.
Yes, I
used
did.
to work at Payne Weber, right around the corner. We probably bumped into each other at Harry's in Hanover.
We may have.
Back in the day, over a triple scotch and eggs Benedict or something.
We may have.
We're out of time. We got to go. Thanks for being on the Keiser Report.
Thank you very much, Mac.